Good morning. This is Alice Lind, and I welcome you today for my webinar. And I would like to start, as usual, with you to give me a feedback if you can hear me well and if the picture of my screen is clear. So let's wait to see. Okay, thank you for the feedback. As far as I understand, you can hear me well. So what I wanted to talk about today is indicators of the technical analysis. So some time ago I spoke about the method of market analysis. Well, there is technical, fundamental, and separately we can see the pattern, candlestick pattern analysis. So one of the most commonly used ways of market analysis, that's the technical analysis. Technical analysis, basically that analysis that is based on the previous results of the market movement. Also, we can basically this analysis, that's sort of calculations, and they allow us to calculate and to predict the further movement of the market based on the previous results. And today I wanted to start with one of the most highly and commonly used indicator, one of the most popular indicator, which basically is the base for a series of different other indicators, and a lot of other includes this one in their calculations. And right now I'm talking about the simple moving average. At the Finmax platform, you can add this indicator to the chart. Hold on. So here you can add this indicator to the platform based on the view that you're using to show you changes in price on the platform. Candlestick or line area or line view or area view, depends on you. Besides, this indicator can be added if you are using more advanced charts for deeper market analysis. So let's say here on the TradingView platform, we can also add moving average. So what basically this indicator give us, and what is that? Well, that, as I told you, that's widely used indicator that helps to smooth out the price action, filtering the noise from the random fluctuations on the market. It's a trend following lagging indicator. So basically it means that it's based on the past prices. Okay? And moving average, as I told you, is the part of many other indicators. So let's say one of the most popular, it's a MACD. it also includes moving average into its calculations. Moving averages, they are important analytical tool, and in most cases they are used to indicate the trend, to identify the trend, and to see if there is a probability of the potential change, a probability of change in the current trend. So basically, from the start, simple moving average can help you to determine the direction of the trend and probability of trend change. So what does it do and how to use it? So basically, here you see we can change the settings of the moving average. So what does it mean? It means that how many candles will be included in the analysis. So basically, right now we see that each ninth candle is included. So basically, if you put here bigger number, you will see that your moving average will be much more smooth. Okay, it won't indicate, it won't catch the current changes in price, but it will be more exact and precise in showing the trend, and it can be good helper in your trading. When we put here like the smaller amount, moving average will react to the market changes. You see that it's not so smooth. Almost always it follows the candles that we have here, and it's not that general as we had when we put the 100 candles for analysis. So basically, many traders use simply moving average in order to make the analysis, but the moving average with a different period. So let's say I can add here like another moving average and another one. So what we can do, let's put here like 8 candles, make it, let's say, red. Here I'll make it's a blue one, and here we'll have 15, and the last one, let's put 50 and make it green or violet. So basically right now we have on these charts we moving averages. One of them is pretty smooth, 2 of them they are following the current changes of the price, so they react to the jumps of the market, and basically partially they can be influenced by the noise that we have. So there are like several methods of how we can use these moving averages besides just simply to show us the smooth price. Okay, let me switch off now. So right now we have here like the simple moving average that include which period is 8. Let's switch to shorter time frame, 1 hour, let's say. So basically here the moving average shows us the trend, and basically that's the key function of this indicator. And most traders who trade following the trend like this indicator, because it basically shows the trend, it shows the direction. And as I told you, this is lagging indicator, so it doesn't predict the next movement, but it tells you what was before. So how can it help us in our analysis? How we can understand the trend based on the moving average? Well, if you pay attention to this chart, you will understand how simple it is. So basically, when the candles is above moving average, when they are above moving average, it means that the trend goes up. If they are below, it means that the trend moves down. So simple as it is. When the moving average crosses the candles, it means that the trend can change, and at that time we need to pay attention to the further events of the market and following changes of the market. So basically, what do we see here? The current Euro-American dollar situation, we see that the trend was following down, and after that the price has crossed the moving average, has crossed the candles. So basically the signal for us to pay attention to the following events, to the events that gonna happen in the market following this current situation, and as the trend can change, and we will be able to open the trades for up movement. Also, what we can do with the moving average is to determine the support and resistance levels. Let's switch to another time frame. A bit bigger one. Even let's take probably 200. Well, basically what does it give to us right now? That's the strong levels of support and resistance. You see that within the movement of the moving average, the price is reflected from it as up, as down. So basically when the price of the asset approaches the moving average, we can make an assumption that after that there is pretty high probability that the price will jump off the moving average and will bounce back, basically. So as it happened here, so the price reached the moving average, it reflected. So basically we could open the trades on the long-term prospect and to trade there. Also, well, if you are using not that long period, the signal will be also good, though not that strong. So let's say when the price will approach approximately this level, when the moving average will also develop, we can make an assumption that it can reflect from it. But if it breaks through, we can proceed to open the trades for further growth of the asset that we are using at the current moment. Well, basically, it can be used both for those traders who prefer long-term trading, and for those who prefer short-term trading. Because of course here I show you the chart, the changes in price for like 1 day time frame, but you can also use it for 1 minute, 5 minutes. Of course the signal won't be that strong there, but it still can be used for trading. On one of the previous trading webinars I showed you the approach of trading using 3 moving averages with different period. As far as I recall, it was like 8, 16 and 24, if I'm not mistaken. So basically you can use it for different periods, because the moving average, that's such indicator that basically help us to understand as the trend, as the current changes of the smoothed data, also basically as this indicator partially shows us the resistance levels and support levels. We can use it to determine the probability of the reflection of the market, of when the market bounced back, and so we can use it for our trading. So what else we can make, what else we can do with the moving averages? Right now I will switch on all 3 indicators, all 3 moving averages with the different period. So right now I have 8, 15 and 50. Let me change it for 16. So what does it show us, and how it can be used? Basically, let's see. Let's highlight the the moving average with the short period. It needs to be like more bright. I will change it for purple. This one will change for another color, because it's important for us to see that one. So what do we have here? Basically we have here 3 moving averages with different period. So how can we use it in our analysis, in our approach to trading? So 2 of them, they are pretty short, and one of them, like it includes 50 candles. Basically we can even use the different approach, like to put here to start not with 15, not with 8, but 15. Here we can put like 50, and here we can put like 200. Basically, that's the sort of the crossover when you need to pay attention to what's going on right now and what moving average is crossed and how. So basically that's pretty simple. If you see that the short-term moving average crosses to order from below, it means that the price has potential for growth. If from the upper point we can start trading for low and make profit on that. So here the period can be pretty different, and I believe it's only up to the trader to decide what period here is more suitable, which period here is more exact. You can use short, like as I showed you on one of the first trading webinars, like 8, 16 and 24 also, and they are crossing, we open the trade. You can use more longer period like 16, 50, 100 or 200 even, and in this case the signal will be more smooth. So what I'm gonna do next, I'm gonna ask you to try to analyze the market using this indicator. Try to notice how do the price react to the market, and definitely come to my Thursday's webinar. I will use these 3 moving averages for trading. I will use them with the different periods so we could see in real life which of them work better for my trading, for my approach. I'm planning to use like as 1 minute time frame, as 5 minutes. Probably I will also open a couple of trades like for a bit longer period of time. So I would like for you to visit it and for us to trade together, because on the trading webinars we will be able to discuss everything. You can offer your own asset to trade with, and I will gladly do that. Okay, so thank you for your attention, and see you, hear you on Monday, on Thursday. Bye bye.